What I'm about to share with you in this video is the best you can get. A simple, proven and profitable boom and crash trading strategy. In this video, I'll be sharing with you how exactly you can trade the boom and crash using just point of price reactions. Where are point of reactions? This can be point of reversal or point of continuation in the market. Once you are able to identify this zone, all you need is to focus on your next confirmation pattern. I'll be sharing with you how exactly you can identify these zones, the time frame you will identify these zones, and your entry confirmation in a buy and sell market scenario. So this is my chart, and I'll be showing you how exactly you will identify this zone. So first, let's begin with identifying the trend of the market. So this is my chart. Just as you can see, the first we need to do is for us to determine the trend. Always take note that the trend is always your friend. So in determining the trend, if you are good at identifying structural points, either by a naked chart, you can do that. And if you look at this carefully, you realize that this is a higher high, higher low, higher high, higher low, higher high. So obviously we are in an uptrend in this scenario, but afterward price drop this way because this is higher high, higher low, and a higher high. So over here we have this typical break of structure. So now we are in a downtrend. That is one way you can identify your trend. Another easier way for you to do that, in order not to be a victim of manipulation at the point of reversal, is you focusing on a continuation trade. And to do that, you can use the middle Bollinger Band. And then you'll be patient enough that whenever price becomes consistent below the middle Bollinger Band, it is a downtrend, and when price is consistent above it, it is an uptrend. So having established that, the next question is, on which time frame do we determine the trend? You can determine the trend on a 1 hour time frame. You can determine the trend on a 4-hour time frame. So the higher the time frame, the stronger the signal or the trend determination. The next question, what is our point of reactions? Point of reactions are those zones where price either push to the upside or pull to the downside. This can be seen as a structural point. So you can see that price at this point, sellers react and take price down. That is point of reaction. Here there is a reaction that take price up, another reaction take price up, another reaction take price down. So we are going to focus on these zones, which are major point of price reaction. So the zigzag indicator automatically helps us to mark out these zones. So our focus is going to be on these zones and as well as the middle Bollinger Band zone. So this middle Bollinger Band will play a key role as far as this trading strategy is concerned. So here is our middle Bollinger Band. So we are going to consider the middle Bollinger Band as well as our point of price reaction. What that simply means is, even if we did not get the indicator point of price reaction, but once price comes to the zone of this middle Bollinger Band, we'll treat it as a point of reactions by default, and I will show you why. Look at this point, price pull to this place. You can see that the point of reaction we had was here and here, but when price pull to this middle Bollinger Band, you can see that price reaction from that zone. So this is obviously a proven and a workable pattern. And even in this scenario, you see that price pull to there and you see it pull down to the downside. So that is one. So we need to do what? Identify the trend. So in this particular scenario now, it is established that we are in a what? That we are in a downtrend. So how do we know? We had this break of structure here that shows that this is a downtrend, right? And at the same time, price is below the middle Bollinger Band. And because this is the scenario, remember, you are now wondering that I said earlier that when price is above, it is an uptrend. But that was not what I said. I said price must be consistent above to be an uptrend, which means that price must be sustained. So if you consider the reaction of price here and that of this zone, you realize that price is more consistent below these zones than what it is here. Alright, so having established that, we now have this movement that begins from this point all the way to this point. So what is the next thing that I will do? I can use my Fibonacci level and I will flip this point. Remember, we want to sell and we want to buy. So we have determined our trend. What we want to look at now, we have established the time frame 1 hour or 4 hours. The next thing we want to determine now is where do we sell from or buy from. So you can see, so in this scenario, price did what? Price pulled back to the level of 61.8 of our Fibonacci retracement tool. And afterward, you can see that pullback all the way. So another point you need to take note of is the fact that price only rally above the upper Bollinger Band. So what do we do? Look at this. You now focus on this point. Price came down, retest the middle Bollinger Band. So your sell entry should have been here, and then you see price playing all the way to the downside. So that is according to the trend. Now this is boom 500. So let's look at what is happening with boom 500. Now over time, boom 500 has been on a downward movement, which is a downtrend. And of course, if you look carefully, you can see that pattern. You can see the movement: higher high, higher low, higher low, higher high. So this price drop down. Here we have a break of structure. Okay, and when we did that, so let's look at the current price scenario. Look at this. Price came here. That is our lower high, right? This is our lower low. Look at the indicator price reaction. So we had this price reaction at this point. So price reacted from here and came down. So we are going to mark that zone of our reaction. So we'll mark this zone now. So what do we want to see? This zone now coincides with our middle Bollinger Band. So it is very simple. The zone coincides with middle Bollinger Band. If you look at our indicator window, the price line of the TDI is outside the upper Bollinger Band. You can see that here, which is the green moving average you are seeing. So now this is a live analysis. What do we want to do? Once we get a bearish engulfing candle here, we will sell this. Either a bearish engulfing candle or a bearish hammer or a bearish pin bar, we will sell this to the downside. So our entry confirmation is a bearish engulfing candle. This is based on the trend. So you have to take note of that. So let's look at what next assets can we look at. We want to see. Alright, this is crash. Beautiful. This is crash 500. So let me do this now. And crash 500 is making an upward movement. Higher high. Sorry, higher low, higher high, higher low. So if you are to go by this, our next point of movement we have here too: higher high, higher low, and now we have a new higher high. So if we are to follow structure of a naked chart, it simply means that price is in our point of interest, which is here, right? But if we are to go by our price reaction using the zigzag indicator, we will mark this point. So remember, depending on what suits you is exactly what we are looking at. So in all of these points, we want to make a buy trade decision. Now this is based on a naked chart analysis. So what decision? And look at this again. Let me show you one secret. We have our trend line now connected to this point. This is point A and this is point B. Look at what we are having. Do you see that? So perfectly well. So we will want to see now a bullish candle. If we get a bullish engulfing candle or a bullish pin bar or a hammer, we'll buy from here to the upside. But however, by the virtue of our Bollinger band, if you want to go with the Bollinger band, this is obviously a downtrend. And it means that price does what? Price already pushed to this upside. Okay, and price retest the middle Bollinger band. So when we had this bearish engulfing candle, that is where we would have sell the other time for price to go down. But as it is now, we cannot sell. Here we are having a bearish engulfing candle. But the question is, why can't we sell? We are having a price build up here. So obviously this is looking like a chart pattern. So, and this trend line is serving as a support at the moment. So if we must sell, we want to be patient enough for what? For price to break this level of support or this resistance zone. So when price break it out, we will sell to the downside. This is a live analysis. We are at a point where if we get a bullish engulfing, we are going to buy. But if we get a bearish and a break of this pattern, let's look at 15 minutes and see exactly what this pattern looks like. So that is it. On this 15 minutes, you will see that this pattern is looking more like a bearish pin bar. So once price break out of this, we can get price break out of that particular point, we will come in with our sell trade. So that is keeping it simple. Price is below, and it is important you know that among all the assets, boom and crash respect indicator more than any other pairs that you can think of. So just focus on this. Go back, test this. You can just simply mark your point of price reaction, which is all of this. Allow price to come to that zone and then get a candlestick confirmation, and you can decide on your entry. Remember, if you come to 4 hour, we are in a complete bearish price movement. And I can see from here, this is looking more like a bearish flag pattern build up on the 4 hour time frame. So we are hoping that this breaks out and sell all the way to the downside. So let's look at crash 1000 and see what crash 1000 is doing. I gave this analysis in my signal group earlier. This is a bullish flag pattern, and we actually had this trade. After this breakout of the pattern, it is a buy to the upside. So now if we were to trade this is also above the what? Above the middle Bollinger band. Now if determine the trend using the middle Bollinger band and that of the naked chart analysis is confusing to you, I recommend wait for both the middle Bollinger band and the point of interest, that is your structural analysis using price action on the naked chart. Let it all be the same to avoid like in this case now, price is above the middle Bollinger band. Do you get that? And if we are to do our structural analysis, you realize that price is doing what? Price is giving us lower low. This is a lower high. Then here we had a break of structure. So obviously now we are in a downtrend. And what are we having now? We are now having a higher low, a higher high, and then here a higher low. So if we focus on this will now be the best thing for us to do. This is an uptrend, price above the middle Bollinger Band. So what are we expecting? We are now marking here. This is our support zone. So we had this point marked out based on this price reaction, and as well as we had this point marked out. So what do we want to see? If we get a bullish engulfing candle here or a hammer, we are going to buy. Or if price pull down to this zone, we get a bullish engulfing or a hammer, we are going to buy. So any of these will play out. Just focus on this, but we are not selling because this is an uptrend. But when you compare this to your crash 500, right? Yes, this is crash 500 and this is a 1 hour time frame. So if you go by a naked chart analysis, you realize the higher high, higher low. Okay, higher low, higher high. You realize that price is in an uptrend, right? But price is not above the middle Bollinger Band. If you are to go by the Bollinger Band analysis, so this is a great conflict. It is important you wait for an alignment. Alignment means you stay out of this trade at the moment. For instance, you can see that this is boom 1000. There is an alignment. This is a break of structure. We are in a downtrend. Price is below the middle Bollinger Band, so this is an alignment. So thank you for watching. If you have any question, go ahead to ask in the comment section and I'll be there to answer you. See you in the subsequent video, and do not forget to like, share and subscribe.